The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Well, we have Venus going retrograde today, and I think Mercury going direct. That's what I think it is. Let me double check the old thing. Yeah, yep. Mercury is starting retrograde, and Venus is going direct. So that means they're slowing up and speeding up. Anyway, we'll keep an eye on those. I want to post a chart here of the from one of our good friends over in the city of the wind over there in Las Vegas, Nevada, showing a Pacific Gas PG&E. And you'll notice here, it's PG&E. You'll notice that the stock has gotten hammered because of the fact that they supposedly started those fires in California. And now one of the spokesmen for the California government said, we are not going to let this company go bankrupt as if they have control over that. And the stock rallied 26% back up above the highs of yesterday. So just because somebody says something doesn't mean that it's so. So pay close attention to that. Before we get to the DAX and the others, I want to post something from our good friend Shane Smolian. And if you'll notice here, this is a forecast that he has going right now. It looks like the 22nd of November looks like it could be a good low. If you notice that his program nailed the high spot on right there at October 1st. And so he's looking at this bottom, 6 weeks from the spot. And remember, on the 26th, folks, that is the 22nd is Thanksgiving Day. Remember, the day after Thanksgiving, folks, is the most positive day in stock market history. It's up 75% of the time the day after Thanksgiving. So pay close attention to that one. Those are big odds. It goes back hundreds. Well, we got hundreds of samples of that. So it's a really important thing, to pay close attention to. So within a day or two, you want to be watching for something. We had a pretty good rally yesterday. Market backed off about 30 handles overnight. Now it's just backing and filling, and it's just under some, more pressure than you might want to think. Let's take a look here at the DAX index. It's also been trending to the downside. This is a shorter term version because we can keep a better eye on risk when we're looking at this. You'll notice when you see this DAX chart here, you notice the three lower tops. That's a 135 pattern. That's a really nice pattern. We have lower tops each coming in at a really nice Fibonacci number, and it makes it look pretty good. Now, the one that is going to be really interesting here in the next few weeks is going to be the FTSE, because of the British pound and Brexit, and Theresa May having all kinds of problems. My friends across the pond tell me that she basically has no chance of surviving, but we'll see. That's neither here nor there. How it affects the market might be totally different than you might think. Now we're going to take off our hats, and we're going to hear the sound of one hand clapping here. If you'll give me 1 second here, we'll take a look here at the trade that we were talking about from Mr. Z just the other day, just 3 short days ago, when we were trading at 114.20. The high was 114.24. We're now trading at 112.88. That's down 14 large, folks. That's $1,400 in 3 days. That's not bad for someone that doesn't have to work very hard like Mr. Z does, but he does a lot of hard work. And you'll notice that this was a really nice pattern. So we want to thank him for that. There's some really great ideas that come to the den here, and we certainly appreciate everything everybody says. So it's really a big thing to to take a gander at anyway. All right, the next one we want to look at here is we've covered the FTSE, we've covered the DAX. We want to cover the one that everybody is watching, and that is the Euro. Let's get this up here. This is the most actively traded thing in the world here. Congratulations again, John, on that. Mr. Z, that was an absolute beauty. Here is the euro. You're looking at, we're almost there, folks. You'll notice that we were watching for 3 potential rallies here. We made the exact ABCD down there at 1. The low was 112.15. The ABCD measured to 112.20. We're now almost within about 15 pips of the exact high that we're looking at, which is at 114.10. Now, you'll notice those channel lines that are there, those dark black lines, those are equal rallies. Each one of them, you had one in October, one in late November, and you're having another one here. Now, if we go popping through here, and by popping through, if we get above 114.60, then that could be a game changer. But right now, between this area, 114 and 114.20, this is a really important spot because of those equal rallies in a downtrend. And if you'll notice, if you just did the Fibonacci retracement on it, you'll notice that the rate retracement's going to be spot on. It'll either be 618 or 786, but that's what you're looking at. If you want to trade in the direction of the trend, this is the kind of trade that you look for. We've already had 2 of them, so maybe the third one doesn't work. So let's just wait and see how it turns out. But that's an important one. Now, we had something really big happen yesterday, folks, and I wanted to take a minute to go over it because when something like this happens, it is really, really dramatic. Here is the just a second. I'm trying to get the natural gas chart up just to show you where we are with that. I've got so much to cover this morning. I hope I can do it all at one time. But I wanted to show you the outline that we're looking at for potential natural gas move. And no, that's not that. Shut the front door and raise the rent. Well, I have to move on to something else. Let me get on to we'll cover the next thing we'll cover here is let's get this up here. This is platinum. I wanted to bring this up today because it's very important. Platinum just made the 382 retracement up here, folks, at 348.80, I believe. That equates to the 61% retracement in gold at 1325. If this is correct, that should be the rally high in gold. If this is correct, if it gets much above 1332, we will have to reevaluate what we're looking at because that could be something totally different. Here, now I finally found the natural gas, and I'm going to be coming up to a break, but I'm going to get started with it because this is how you determine how trends change, and I think it can be quite important because the main thing is if you remember yesterday, the weather reports were so bad they didn't think they'd even be able to have enough coats to keep people warm for the winter, and it only dropped $10,000 a contract. Since November the 13th, just 3 short days ago, folks, we went up $11,000 and came down $11,000. We've had a $22,000 move in crude oil, in natural gas in just a matter of a couple of days. And if you think that doesn't shake up the folks on Wall Street, you'll notice here this is the ETF for natural gas, the UNG, and you can see the monster move that's happened. Well, that's not nothing compared to what happened in the natural gas contract because it was up 11, down 11, and now it's setting at a point where it's ready to move to the downside. We'll cover the rest of this when we get back. It's important enough to me anyway, so this is what I like to do. 877-927-6648.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
All right, we're going to continue on with this natural gas contract because it trades very, very accurately with the numbers and the patterns. And since we're in the midst of a supposedly big weather market, I just wanted to give you my 2 cents worth. Here's the last 5 days of trading, and if you'll notice, on Tuesday we had that 382 pullback and the market went sideways. The key point to look at, folks, is that if you'll notice that 1.618 red box, it's marked there when the market accelerated from the 412 level. It went all the way up to 490. That's an $8,000 move. And with a 15-minute chart, you see that it did that within about 2 hours. And then, of course, it dropped $6,000, went up $6,000. Then it went all the way down and dropped $10,000. And now what we're forming is an ABCD pattern coming in at the 382. Now, this is an ideal situation for a bearish scenario. And for the 2 reasons is, one, is you still have the supposed fundamentals out there that seem to have been shattered by price action, and you also have the technical aspects of an ABCD correction. Gartley said in page, I think it was on page 223 of his book, is if you will look for the first ABCD correction in a new bull market or a new bear market, that's the best place, you know, to institute a position. And this would be the first ABCD. Of course, it's on a small time frame, 15 minutes, but it does fit all the parameters. We're going to be watching this here the next couple of days, and especially if it works or if it doesn't. We have to show, you know, when these things don't work, because, boy, that happens a lot. So we want to be able to show you that you must use stops and protect yourself. But on a position like this, the area that you're looking at is 429. That's $1,500 where it is right now, and you want to be getting ready to sell it there. Now, the one reason that you wouldn't sell it there is that if you had a really strong bar, like a 10-point bar, where it just goes straight up, and you know you don't want to try to catch a falling safe, so you need to watch it closely. What you'd like to do is to see it take the rest of today and maybe even as early as Sunday night or even Monday morning to get up there. Then you have a very, very low risk parameter to work with. If you get there too fast, you know, that's not very good. These swings that we've had between yesterday and today, I mean, I can't count the one yesterday because that was $10,000 down, and then after that, you had a $2,500 rally, then you had a $2,500 sell-off, then you had a $2,000 rally, another $2,000 sell-off. So this market is rocking and rolling. So It's not for the faint of heart, but it's certainly tradable, and it's something to learn from. And this is what we're here for, is to try to give you things of what's going on. What is a bull scenario? That's when you buy on March the 5th of 2009 and you go on vacation. You come back on October the 1st of 2018 and say sell, and that's about it. Anyway, yes, you're right, Mr. Z. 39.30, those lows were tested right at fib support. That certainly was corrected. It was right on the money too. Very good. And by the way, John, you alerted this to us. I hope you can post a chart, because I'm almost sure it was around 275 when the natural gas was down there, and it just I think I still have that from. Bear with me just 1 second here. We'll see if we still have that here. Yes, we do. Yes, we do, Mr. Z. Let me get this up here and let the folks show, because I kept it in the newsletter for the futures. You'll notice right there, right around September 12th, we were trading at 275, and that's when Mr. Z came out and was talking about the 78% retracement. If you look at it really closely, folks, there's a perfect ABC in there, making it a Gartley. And from 275 last week, we were trading at 380, and we went to 490. So you can see the move that was there. Anyway, it's a really good one. The real key there, if you notice, was to us, and we were watching this, of course, was back on October the 28th, when the stock market was making its first bottom. We hit that exact 382 retracement off of that low from September 10th, and that gave us the ABCD structure up to about, $4. So hats off to you, buddy. We really appreciate it, and I know the folks in the den certainly do, because I get responses about that, all the time. So we'll be keeping a close eye, on that one. Now, we need to talk just a tiny bit, because I had 3 emails about the Bitcoin, and we'll get this up to take a look at it. Here is Bitcoin breaking down, folks. We've been going sideways since September. We've finally broken down. We've taken out all the lows here. The whole world is now bearish on Bitcoin, but we've got to pay close attention, because over the past several months, we've been talking back and forth, up and down, about the possibility of Bitcoin getting down to a certain level that we're going to show here in just a minute, if I can find it. And I put it in here last night, and if I don't find it, I'm going to be one upset little camper. Shut the front door and raise the rent. Why is it that I have such, well, the problem is I've got 50 of them on here, and I should be able to spot them real easily, but this one is simple because it's in a different format, and I can't find it. Shut the front door and raise the rent. Well, I'm going to have to repost it, I guess. Wow, what am I doing wrong? Well, that's what's when you're technically inept. You got to be able to. Oh, one way I can find it. Hold on, I just go to my Snagit editor, and I think all I got to do is to go back here somewhere. Well, I guess I can't even find it there either. I'm going to have to post it after the break, folks. Oh, there it is. Hold it. We got it. There it is. Let me get it here. I'm just going to bring it up into, you'll just see it in my Snagit program, which isn't too bad. You'll be able to, you're pretty much correct. I think this will show it. Hopefully you'll see this is a log scale of the Bitcoin when we got to almost 20,000 back in January. And now we're completing the ABCD, and that comes in right at between 4,200 and 3,800 is where that ABCD pattern comes in. There's going to be a whole bunch of numbers there. And not only that, it's going to be the 4th time that Bitcoin has had an 80% correction in its moves that started way back 10 years ago. In other words, they've had these monster moves, up to 100 and then back down, they lose 80%, and up to 1,000 and lose 80%. We're doing the 4th one right now. So we want to watch. I haven't put a trade on. I've only met 3 people that have ever been in Bitcoin. One of them hit it huge. Somebody that used to work for me many years, well, 3 or 4 years ago. Well, no more than that, 5 years ago. He made it really big. And then a fellow in London that's a reporter for the Financial Times that we know did pretty good. But anyway, those are the only ones that I know of. But that number is really good, and it's technically, a very good thing to look at. So right at that 4,000 to 3,800, we'll be watching it closely, because we could be, really close to spot on what we're watching. So let's take a let's pay close attention to it. The other one that looks interesting, folks, here is to keep an eye on Goldman Sachs. And the reason why is that, it's in the banking sector, and that's where the money is. And if we get below that 199 level in Goldman Sachs, that is not going to be a good sign. So that's what you really want to be looking at. And when we come back from the break, I have an important message that I heard on Bloomberg this morning from Paul Tudor. Oh, no, it was, I think it was Bloomberg this morning about Paul Tudor Jones. He had a comment about the market, which he doesn't make those very often. And it's not about the stock market, but it's something we need to pay attention to. And I'll talk about that when we come back. And we'll certainly do that after this break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary power law vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks. Paul Tudor Jones from Tudor Investments was on CNBC this morning talking about global debt, and he felt that the key to this was going to be the government bonds, not government bonds, but the regular bonds, the folks, corporate bonds. The corporate bond market was going to be the one that was going to be in trouble. And of course, the number one to watch there is the high grade or not high grade, high yielding bonds, i.e. junk bonds. Paul Tudor Jones was brought into the business by a man named Eli Tellis out of Memphis, Tennessee. He was in the Cotton Exchange. If you ever watched that movie with Tom Cruise, when he plays the lawyer, my goodness, I can't remember. It was 1991, 91 or 94. Oh, when he played that lawyer, I can't remember the darn name of it. Anyway, that Cotton Exchange is right there, and I've been in there many times. I actually met Eli Tellis several times, and I was friends of his son. His son was a cotton trader in New York, and we remained friends after his father passed away. But his father was the king of the cotton market for many, many years. The reason that Paul Tudor Jones talked about this. He says the floating amount of debt that's out there. We've added, trillions of dollars over the last 8 years. Plus, we're looking at the debt for students, the student loan debt and car loan debt and all the other stuff that's out there. And eventually it turns into a really bad thing. How it'll affect the market or not, will remain to be seen. But we do follow the high grade. Wow, let's try that again. The high yield market. I don't have an updated chart of the advanced decline line. I do that at the end of the day, peak. So I'll try to do that on Monday and keep an eye on it. But I don't believe it's doing very well. It hasn't for quite some time. So we'll keep an eye. We're having a pretty good rally now in gold and silver. We're up against major support here in gold at 12.26. And silver at 14.40. And as Mr. Z pointed off here just a little while ago, right off of that bottom at 13.86, and I think you were telling us about that bottom, right at that bottom, as I recall. We were right at, I believe, a 1.27 expansion at that point, and it was very, very close to the monthly line in silver that was, really a big thing to look at. So we're going to keep watching these things, of course, for you. But the main thing is we want to see. Here we go. There, Steve Rhodes is giving us the skinny on the advanced decline line. It's still above the 1029 low. That's good, Steve. That's another positive thing to look at. Now, yesterday, folks, we mentioned the possibility that, we were down near what we thought was going to be a major bottom because we had all of those patterns completing in the NASDAQ, the S&P, and the Dow Jones. The Dow was off, almost 200 points a little earlier and then came storming back. So we're at a real interesting level coming into the weekend, the holiday weekend, which is this week. We'll be open Monday, Tuesday, Wednesday's a half a day, I believe, and then all day Friday, which is Black Friday. And we're going to have some big things happening around that time. So we want to pay close attention to what Shane posted as a low. Since we're closed on the 22nd, we want to be looking at it between the 21st, and the 23rd. But I believe that the markets will be open in Europe, so we'll probably be trading Globex during that time. So it'll be some pretty wild rocking and rolling as we go through looking at a few of these things. Now, on the gold market, we had this bottom. Just 1 second here till we get it up here. It was just absolutely a beautiful bottom in the gold that we made, and I'm trying to find the chart. Oh dear, Larry, you just have more trouble, don't you? I'll just look at a second. Don't have it. Well, anyway, we noticed that the 1197 was an exact 618 and also a 78% level, and it was also a beautiful 135 pattern, which was higher bottoms, much like we were looking at in that Canadian dollar that has continued to move lower. So all of those, they're just patterns. Some of them fail, some of them don't. But you'll notice here on that Canadian dollar, we did get up to that 32.60 level. We're now trading below the 31 level. So that's starting to move a little bit. And we'll see if that's going to be continue to move. Here is the silver. I've got it here. Hold on 1 second here. We'll get it up here. And this is what we were looking at this past week, that if you look at the right-hand side, folks, where the little black thing there that says the price of 14.14, if you look at that price there at 13.854, the low on silver was 13.86. And now we've started to move up. This could be something really big happening in the markets. If gold gets above 1232, then we're going to be them are going to be moving. Yes, Terry, I try to take my time, but sometimes you try to cover too much, and it makes it a little bit difficult. So anyway, we're going to be watching. One of the things that they're talking about in the markets that I think is silly is they're talking about the breakdown in the chip stocks. Folks, I looked at Intel, which is I believe it's the biggest of all the chip stocks, and it doesn't look, I mean, it's not bullish, but it certainly doesn't look as bearish as Goldman Sachs or some of the others. It really doesn't look that way to me. So I don't know who reports for them, but just check it out yourself. In fact, I'll post it after the break here, and you'll see that the Intel and stuff doesn't look, any different than, some of the other things that you're watching. So I don't know what that means, but we'll see. The key to it has been here's Intel, right? Nope, that's not Intel. I'll post Intel after we come up to the next break, but those are not looking anywhere near what you're looking at with the banking stocks. That's where the money is, and that's where you follow the money, and we haven't seen that. Now, if we take a look here at our good friend General Electric, because this is one of the junk bonds that was turned into junk bonds that Paul Tudor Jones was talking about, because the paper on this has been downgraded. The key to this, folks, was at 1618. That was at $11 a share. That was 22% higher than where we are right now, and now we're down, still trading around $8. But this looks like it's headed to where it was in 2009, and that was $5 a share. That was one of the original Dow stocks. It's the only original Dow stock that's left out of the Dow Jones original 30 stocks. And stop and think of it, folks. There's been a heck of a rollover in that stuff. I don't know if you know this or not, but during the time it was in there, American Telephone and Telegraph went bankrupt twice. And even today, Jeff Bezos said, believe it or not, Jeff Bezos said Amazon is not free of failing. I mean, can you believe this? He's the richest man in the world, and he's saying that his country is not immune to failure. And he's right, because if they make stupid decisions like Montgomery Ward, Sears, JCPenney, and a whole bunch of other companies, they can certainly go the wrong way. Look at Eastman Kodak. They just forgot about the camera business. It's hard to believe. Okay, one of the folks have asked us about the grain markets. Folks, be patient. We've got this positive cycle coming due. We're still coming down a bit, and we're looking to see if we can get these just a tiny bit lower, and then we'll have a good shot. 877-927-6648.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, folks, posted the chart of the euro again on that 4-hour chart, and bada bing, bada boom, we hit the number. And so pay attention, the 114.15 should have been it. You know, whether it gets much above that, we'll have to wait and see, but that's pretty much what we're looking at here. Pay attention. Let's take a look here quickly at this Japanese yen for our good friend Mr. Z. I know he's licking his chops over there. We're down now on 150 one and a half handles, folks. That's $1,600 US. So God bless you, Mr. Z. Make sure you buy some socks for the homeless, my friend. Anyway, we'll keep an eye on that. And also, let's look at one other thing, since we're in the mood today to kill a little time here to the end of the show. We were talking about this natural gas and technical analysis. And here we are. Let's just get this up here so all the folks can take a look at it. We're going to see if technical analysis works. Now, it doesn't work every time, but it does work some of the time. So here we are, moving up nicely. You see the ABCD pattern coming in here at 428 in the old natural gas. Right now, we're trading at 421 even, and so 428, that's another $700. And if it gets there, fortunately, you'll have to put a stop in on this. And selling it at that 428 level, you got to risk about $500 because this is the pork bellies of the energy market, folks. This thing really rocks and rolls, as you can see, but it can be traded. And the 127 expansion of the C leg also comes in exactly at that 428, 429 level. So about a $5 stop would all you would have to be risking. But it's coming up there nicely. It's not having any really wide bars, which is what you really want to stay away from if you're, getting into these really wild markets, much like we had in, yesterday, when we had a day before yesterday on the 14th, when we had these $5,000-$6,000 swings in a day. Unless you're lucky to be on the right, and luck is where preparation meets opportunity, to be on the right side of that, you don't want to have any involvement. It's all about risk control, not about how much money you can make, but how much money you don't have to risk. So pay close attention to that. I'm still holding out hopes that the bonds will get up to that 140 level. That's the big ABCD pattern that we're following, and I think that we've got a shot at that. The $64 question is it going to do it in the next 3 or 4 days, or will it be into next week? But we'll be watching that closely. The notes look very, very similar to that. Someone asked a question, if I looked at one indicator, what's going on in these markets, I would have to pick the banking index, folks, because it is the one that is where the money is. And believe me, these banks have inside information. You can flat out peek that what I'm looking at. I'll cover that right after this. I'm looking at 140 in the bonds. I'll do that. Let me do the banking index here. You notice that we had a really nice 382 retracement here. We rallied down to the 9,600 level. So far that is held. So that's another reason to think that we're going to be in this little choppy move here until early next week. And then if Shane is correct, we'll be coming down into the 22nd. And of course, if it doesn't work, I'll be happy to post all of his home information, telephone numbers, emails, Facebook. I wouldn't do that, but some people do. Anyway, let's take a quick look here at the Treasury bonds. I really do like this Treasury bond trade. Whether it's going to solidify the way that I want it to or not, we'll wait and see. But just give me 1 second here, and I will get it up here without any trouble. We're going to be looking at a 4-hour chart, and you'll be able to see it really clearly. There we go. Hey, I did this one right. Why can't I do them all right? Here we go. Here's the ABC. This is, hey, folks, this is the ABCD. You know, this is the ABCD at the 140.05 level. This is exactly what we're looking at, the same pattern that we're looking at in the natural gas. Only the natural gas happens to be a 15-minute chart, whereas this one is a 4-hour chart. So this has taken 6 weeks to complete this ABCD pattern. And then if you looked at the distance between August and September, that rally there, that could take you actually a little bit higher. But the market is so bearish, I don't believe that you're going to be able to, you know, to get that. If it was the worst it's going to do, the number is 140.05 and the equal rally is 140.15. That's only 10 pips away. That would equal the rally that we had all during the month of August, 3 weeks. And this is a weak market, boys and girls. This is a extremely weak market, much like we're seeing in stocks. Anyway, that's what we're paying attention to, so we're waiting for it. We're trading at 139 now, and any type of a news item would push this stuff up into, you know, really strong areas to pay attention to. So anyway, that's what we're looking at. I hope that helps. We'll see how it gets there, but I'm going to be focusing on that in the newsletter this weekend, and also be looking at notes at the same time so that we can follow them all as we look at some of these things. Okay, here, that's we're going to be watching here for 1 second, and then we will be moving here. Okay, just give me 1 second here, and we will be ready to rock and roll. Okay. All righty, we're almost ready here. Oh, I've only got 2 more minutes, and we had one question, and that was about, oh dear, what was that about? Can't remember. Oh, it was about the wheat. Hold on 1 second, folks. I'll get the wheat chart up, and we will take a quick look at the wheat. I think we've got a bottom coming here in wheat, hopefully pretty soon. We're moving up a little bit this morning, but I think it's a little early. I'm looking for a bottom to come in on the wheat. This is easy enough to look at here. You'll notice that we made the big ABCD pattern back here on the 11th and 12th. Now we backed off. I would like to see one more move down to that $4.95 level, $5 to $4.95. We're trading at 507 right now, up about 4 cents on the day. So that's really not very much because the market just opened about 12 minutes ago. But it has some pretty good moves. What's interesting here, folks, is if you'll look at the that high that we made at 521. That was the completion of the ABCD pattern that started back on October the 25th, and the move down to the C leg, and then the ABCD measured right to that number at 520. The high was 521 and a quarter, and from there we backed off about 20 cents. And what I'd be looking for now is a little more backing and filling here to get the market down one more time below that $5 level. And completing a pattern at that spot would be a very good, interesting spot to look at it, because it's got some really good things to pay attention to as far as you know, looking at some of these easy patterns in the grains like we have in corn. In fact, we have a big thing moving in corn right now that is working. So we want to keep a close eye on the corn, but that's going to be down into the next couple of weeks to see if that's going. What we will do is we will follow through with this natural gas trade on Monday to see how everything works out, if it does work out. Remember, the risk is only $500, folks, and believe me, $500 in that market is it's a heartbeat. So make sure you use a stop, for heaven's sakes, because it can really be nasty if you're if you're not careful, that's for sure. Anyway, well, so far the resistance up there at that 1226 in gold is important. That was a 61% retracement of the last high. Both silver and platinum couldn't even make a 382 of those last highs. That's another negative to those markets, but I still think we're going lower in gold. We're not going lower right now, but that's just my 2 cents worth. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I'm going to post a couple of things here just to keep us on the right track. Let's take a look here where we were last Friday. You'll notice here that we were trading up around 27.78, and now we're trading at lots of sevens, 27.27. So it's down quite a bit. Our low has been, as we mentioned yesterday, at 626.75. So we're in this little bit of a trading zone here, and what we think is a pretty significant bear market. The IWM and the NASDAQ certainly rallied a lot less into that move. And if we take a quick look at those, just to remind us where we were, you'll notice that we're still trading substantially below those highs that we made last Friday, a week ago. We're still trading with a 6 handle. If we were trading at a 7 handle, it would be a lot different, but we're certainly not. So these are moving lower, just a matter of when. The real the real movement down in this next leg will be when we take out those October 28 lows, if we in fact do that. And I think we will, but we'll just need to do it one at a time. Just keep following the patterns and try to tell us whether we're going to be on the right side of this puppy for a considerable length of time. This will give us more information as we go through. But you always must use stops, because you must protect yourself. If you don't put a stop in, you're telling the market that you know more than the market does. And believe me, men make a lot of errors. Markets don't make errors, so pay close attention to that. That's a very smart thing to do. We always keep an eye on what's going on in Europe. These lower tops that we've had in Europe on the longer term basis are troubling. It tells us that they're having some economic problems over there. And this US dollar situation, keep an eye on that euro, because if we get above the 114.60 level, this would be breaking precedent, and we could be moving, higher. But right now, it's following along what we expect. 877-927-66.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!